Good afternoon, everyone. My name is Brad Matheny. Today is the 14th of April, and I wanted to create this simple little video showing you how easy it is to use my research to find great trades and to manage your expectations. First things first, visit my website, MENT.com Technologies. MENT.com is the website. Check out the research and the easy-to-use Expert Growth membership that I have. It's very simple, costs about $50 a month, and gives you unlimited opportunities. There's a 60-day trial for $34.99 to show you how powerful and easy this is to use. Now, before I get into too much information about what's included, how it works, it's again multi-layered. There's a lot of information in here for you to use, which is why I offer the 60-day trial. You really need about 60, 90 days to grasp everything that's here. There's the MENT rotational modeling system, which I'll show you in a minute, custom indexes, which I go over every week in my videos, MENT live trades, MENT movers, and TTScanner hot lists, as well as the 33 thrust and pop shift patterns, which we're going to go over here in just a minute. So I'm going to teach you how easy it is to understand and use my research to become a better trader. And remember, we're not trying to day trade the markets here. We're really trying to swing trade the markets up and down through various market trends. So first off, let's take a look at the primary research tool I use called the MENT rotational modeling system. This is the MENT rotational modeling system on an e-signal chart on a weekly basis across here. This is the MENT rotational modeling system on a daily chart over here. And as you can see, we've gotten rotating market trends. We've been pretty much bullish from right here from June 1st, roughly 2020. We've gone through various types of market trends. When we move into yellow, this is your first warning that you need to be cautious. This would predicate cutting down your trading by about a third. When we go into pink, you need to cut your trading down by about a half. This is a very solid warning pullback area. We move back into yellow from pink. That means we can move our allocation up from roughly 1/2 to 2/3. Then we go into green. We can go back into full trading. Various levels of green. Light green is an early warning sign. Dark green is solidly bullish. Same thing here on the daily chart. You get the same colors. Solid green means solid bullish. We move over into light green, which means we can reduce our allocation by about 10 or 20%. And we go into pink, which is 50% allocation, back to light green, back to pink, back to light green, and then back into green all the way up. So what I'm going to show you here is weekly has been long all the way through 2020 and 2021, then went into this half allocation down here. Whereas the daily chart ended up going bearish here. We ended up getting a couple of little bullish triggers that didn't amount to much, but we were very cautious throughout the year of 2022. Moving into the end of 2022, we moved back into bullish trending right here in March of 2023 and continued upward. That's weekly bullish trading here, daily bullish trading on April 13th, 2023, almost a full year ago. When we get into this bullish daily mode and bullish weekly mode, this is your trigger to become much more aggressive using the TTScanner algos. Now understand that this is the primary trend direction. When we're still bullish weekly, we can still hold on to weekly positions or longer term trends. We just need to scale down our allocation and look for shorter targets. Instead of going for, say, 10, 15, 20% targets through this period, you would be looking for, 5, 6, 7, 8% targets and calling it good. So again, same thing here. When we go into neutral trending here, and this is 50% bullish trading with allocation, we're going into moderate consolidation here. This means you want to be very consolidated, very targeted with your trading. Trade smaller amounts, 30, 40, 50% of your normal allocation, and wait for a good solid bottom setup. Notice we got a good solid bottom setup here, move back into full on 100% trading here, We were still at about 80% allocation level here, but caught a beautiful move to the upside all the way through this, never really looking back. And now we're looking over here. Take a look at the current setup. We have a pullback daily and weekly on price trend, but we're still 100% allocated, meaning we can look for aggressive moves in the TTScanner hot list. So what we're going to do is we're going to go back over here to the TTScanner hot list, and this is the end December 2023 hot list. And you can see the ranking here. The bull bear ranking is showing us again 5s, 4s, 3s, 2s, 1s. The ranking goes up to number 8 as a high point, possibly a number 9 on occasion on extreme bullish trending. The negative numbers operate the same way. Negative 8 and 9 are the strongest bearish trending. You can see we've got a number of trades here. This is a weekly chart. This is the TTScanner hot list telling us where we're at. We've got a number of trades here that have been in place for 2, 3, 4, 5 weeks. A couple of brand new ones here, 1 week old, have not hit targets. When they hit targets, it turns purple. So you can see the amount of profit we have in these trades. And this is what I call profit stick, losses slip. So again, if we get into a trade and it again does not turn into a moderate, solid, trending trade, a runner or a profitable trade, the TTScanner will get out of it very quickly. So you need to be aware of it. We have our stop level here. We have our 2 target levels here. We have our in-trade profit here. And then we have our entry price here. Current price is right over here. So we got into this at 93.53. It's currently at 101.73. It's already hit the first target. Our stop is at 91.64. Our second target is at 111.63. But again, what I'm going to do is I'm going to scroll through just the TTScanner. Remember, we also include, or I also include, the value list, which gives you value stocks, the core list, and of course the core inverse list. But we're going to go through and just look at the TTScanner. Now this is the next week. The following week, now we're starting to get 6s, starting to get bullish, more bullish trending, and we get some 33 thrust triggers here. These are 33 thrust triggers. 33 thrust triggers mean you've got a 2 to 5 week window of upward price activity. This is showing us that we're getting moderately strong upward trending. So you can see this is the bull bear change or shift. This indicates that IYG is at a 6 and moved up from a 3 last week, moved up 3 points to become a 6. So that means it was a 3 last week. It's now a 6. Very solid trending. This was our ITB trigger. You can see we're still moving higher, looking for these targets. This was our the same trigger it looks like we looked at just the week before. It's moving higher. It's up now 5.37%. Actually moved down a little bit. Hasn't hit our target yet, but let's go forward. Next week, right here. So here we go. And ITB is now looking for it. 118, right down here. ITB has moved down 6, down to a 0, still long, 4 weeks in the trade. We're at 101, sorry, we are at, 101.23. We've got 8% in the trade. Notice how it's weakened down the list. So you notice the strongest stay up here in this top, call it 10, 15 area. And I tell everyone, really recommend trading the 3s, 4s, 5, 6, 7, 8. So when you get a 3, 4, 5, 6, 7, 8, and they're in the top of the list, they look really good. Now, if you end up getting a 2, 3, 4 with a 33 thrust positive and a pop shift, which will occur here, these are bearish pop shifts, then you're going to end up having an opportunity for a nice little move. But this is weakening. This is in January 14th right now. So now we're going to go January 19th. Moves back up. We get a number of triggers again. Very strong trending up here in the 7s. Now we're getting 7s. All of these are good, solid trades. We're getting pop shift and 33 thrust triggers right here. Very strong trades. A couple of new trades here. And IXJ and IYH. We got a couple of 4s down here with 33 thrust, a 5 here with 33 thrust, and we're not really looking at these negatives. I mean, we know the market is going higher. Remember, we're looking over here, so we're technically right here, end of January, right here, and right here. So we are looking at a very solid upward trend. 22nd. Very solid upward trending. We shouldn't really be looking to short anything because we're in this upward trending right now. And the upward trending is dominant. So understand that while the TT or the MENT rotational modeling system is bullish daily and weekly, we should be looking exclusively over here at bullish triggers. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 triggers this week to choose from to generate profits. Now we're going to watch these to see if they stay here and to see if, particularly these new triggers, these existing triggers should stay until they get exited or stopped out of a trade. But we're going to want to watch these things start to target. Remember, a couple of weeks ago, we didn't have a whole lot of targets. 1, 2, 3, 4, 5. Now we have 1, 2, 3, 4, 5, 6, 7, 8. Hey, we're hitting targets. We're hitting target levels of about 11% in the trade. You can look here and see about how we are. 10%, 14%, 11%, 7%, 10%, almost 9, a little over 9%. You're getting targets, very solid targets across a wide variety of stocks. So now we move back over to the 26th of January, starting to hit target 2s. Okay, QTech has moved up to target 2, 14%. XLC has moved up to target 2 at 11%. We're getting good, solid upward moves. We got a new trigger here. We're getting a whole bunch of bullish. We're getting 6s. Here's a 33 thrust, 33 thrust, 33 thrust. Moderate trending right now. We're not seeing 6s, 7s, and 8s so much. One new trigger over here on SOXX. Move to the next week. Very strong trending. Remember, this is February 3rd. We're getting 7s, 6s. We're now getting more secondary targets. Another new trigger here in IYC, consumer discretionary, looking pretty good, looking like we have some upward trending, a 33 thrust, a pop shift, a 33 thrust here. And again, come back over here. We're now at December 3rd. So we come over here and we can drag this right there. And we come drag this. Basically right there. So understand that we are moving forward through this upward trend, and I am trying to show you how the MENT rotational modeling system and TTScanner work hand in hand. A couple of brand new triggers. Remember, triggers that don't stay in this list as long or generate a flat trade like this, IXJ, these are typically triggers that get out very quickly. When we're right and when the trend is following the upward direction or downward direction of the MENT rotational modeling system, these will start to stack up very strongly on the weekly chart. So now let's move to February 10th. Couple of new triggers, XLY, we have XLV, IXJ. We've got a number of triggers stacking up here. We have no new flat triggers. We're now getting 6s and 7s. Here's a 33 thrust and a pop shift. Remember, 33 thrust is a 3 to 5 week upward pop. Pop shift reflects a very strong upward move, gives you a pretty good 2 to 5 week upward move. So when you get a combination of 33 thrust, pop shift, a new trigger, bullish trigger on a TT scanner, you've got actually 3 systems telling you that you've got good opportunity here. You've got a 33 thrust here and a new trigger here. This is a pretty good setup right here, guys. And again, we're going to watch these as we go. Notice how these bullish triggers are starting to stack up. Notice how these ranges in profit are starting to get larger. 16%, 12%, 15%, 16%, 20, 19. Seems pretty easy, right? Remember, you followed my research all the way through here. We're waiting for confirmation of green trending. And then we come in here and we start looking at these triggers and determining how we want to trade. This trades the SPY. This trades a host of other ETFs and other stocks. And remember, we also have the value list, which is starting to stack up long trades as well. And we have the core list, which is starting to stack up long trades as well. And then we have the inverse list, which works in a downward trend. Right now, all of these bearish triggers on the inverse list are really bullish triggers in these sectors in this uptrend. So let's go to the next week. Here's 216, starting to stack up even more. Look at all these bullish triggers. Look at the ranking. 5, 4, 3. It's weakened a bit. So now we're back over here into 216. That's back over here, 216. So this week here, you can see this rotation right here. This is really weakened a bit, folks. That's what it's showing you here. And we move this over here to one more. That's 212. Back here to 219. So here we have that weakening trend. It's not telling us to get out of a trend. It's telling us that we have some weakening trend here. We're still getting 5, 4, 3s, solid upward trending. We're still moving higher. We're still holding up pretty well throughout our trends, but we're not getting that continued growth in trending. Watching these ranking levels drop means that we're getting some weakening in trend. Nothing to really be concerned with. It gives you an actual opportunity to load back up, particularly like this new trigger at minus 0.91. That's a pretty good entry below our current entry price. This one here, SOXX, at only 3% profit with a very strong top of the list 5, gives us a good range to get into this and try to get this up to the 660 level. So you look for low percentage IXJ here, 1.86, only 1 week old, still strong. Gives us an opportunity to really load up if we miss this and get back into the trade. Otherwise, if we're, say, 10 weeks into it and we're up 4%, you can decide what you want to do here. You do have a 33 thrust. This is 4.15% into the trade. Entry price is at 120.63. We're 125.64. We're close to the target, but this gives us an opportunity to maybe get into some of these trades when they're lower. Here's one that's only 2.0 here, 2.19. These would be only 1 week ago. These would be good potential entries if you miss these to see if they climb back up. XLV and XLY. Let's see if these do climb up. This is a pretty solid little rotation down. We'll see if it closes higher. XLV and XLY. So we come back to the next one. Now we're back into 654s. Let's go ahead and try to find XLV right here. Shot up a lot higher. And XLY shot up higher with a 33 thrust. So we're seeing this thing rank back up in the upper area. Lots of greens now, folks. Lots of trade triggers for you to pick. And again, every single one of these in an uptrend is a valid trade trigger. So again, you can watch these. These could go 20, 30, 40 weeks at times. So here we have a new trade trigger in XBI. Let's go ahead and go further. Here we have March 2nd. So beginning of March, very solid trending, 33 thrust, pop shift trigger, a couple of new triggers here in IHI and XLB. But understand, we've got triggers now that are 13, 14 weeks old. Okay, this is a beautiful trade setup. When you get right down to it, you've got triggers that these are weeks. So you've got triggers that originated back over here and are now 13, 14 weeks old all the way up. And we're catching this move from basically way back over here all the way up on a broad swing trade. Look at some of these numbers. So you're looking at 14%, 14%, 14, 17, 16, brand new trigger, 15, 22 and a quarter, 17 and a quarter, 12. And it's not just one or two. It's dozens of them. And again, people pay thousands of dollars a year to have access to systems like this. Okay, I'm doing it for about $50 a month through my Expert Growth system. And it's very simple to follow once you understand. Every single one of these 33 thrust and pop shift triggers, like you see right here, this darker green and this extreme dark green, these are warning that you have a 3 to 5 week time frame to see a really good move in the market. So, you can watch these. Let's go I8. Well, let's look at this one, see what's going on. ITB and IXN, Global Tech. So ITB and IXN. Ready? Let's go to the next one. ITB and IXN. Where are they? IXJ. ITB is here, rolled down a little bit, still up 17%. So this was another corrective week. You see how we get these rolling downward ranking levels and these roll downward on the bull bear shift. So ITB is here, IXN, I just don't see it. There it is. Rolled down here with a -6. It's still long. It's still up 13%. So this was a pullback. Let's go ahead and see what happens. The following week, we come in here. ITB is top of the list. Okay, ITB is top of the list with a 6. It's up considerably, 15.61%. Hit target 2, and IXN is coming down the list looking for it. There it is. Still holding out at a -6. Not getting a whole lot of move yet. Notice we've got almost a full solid bullish trending scenario here. I don't know how many, 25 triggers for you to select. And this is March 17th. So now, off to the next one. ITB is right here at a 1 with a -5, still looking at 21%, climbing again. And IXN, I might have missed it. Nope, IXN is right here. Again, with a -6, that was the big move, hasn't changed. And it's at 16.11. So we're going to look again at the next week. Remember, we're almost into April now. So here we go. ITB is back up at the top. 33 thrust, pop shift. We're now at 23%. Remember, we started at about 12 or 13%. We've gone up 10% in 4 weeks. Hit both of our targets and rallying up. And IXN, let's see if it's moved at all. IXN is now up 3. It's up to almost 15%. So let's go back here to where we found it. TTEFS, IXN. If I remember right, this was down here. Yeah, IXN was up 12. IXN. Right down here was up 13, so this was the week after, and IXN is right here at 14. So we have gone up in IXN since we started about 2.5%, 3%, not a huge mover up into this area, and this is 324, meaning March 24. ITB has now rolled down. We've hit both targets. And IXN is not here. Where is it? Here it is. -6 at 16%. So we started out at 12, gone up 4% on IXN. And remember, these are very easy for you to follow. Really, all you do is follow the top ranked signals looking for new trade triggers. All of these trade triggers are holding up multiple weeks. We have now nothing that's less than really 5 or 4 weeks. Here's one that's 3 weeks old in XLB. But everything is 10, 12%, 15%, 20%. This is your resource. We're still in a long trade. We're still in this mode, long, over in this area and over in this area. We're still long, and we're still looking at trades. And the current setup for these TTScanner hot list. Come back over here to the current ones. Value list. Here we go. So currently, look at all these longs that we still have. A couple of them are rolled out into flat. We're getting these new bearish pop shift. Now these could be taken. You would take a 25 or 30% position of your normal allocation into these downward trending. We only have 3s, 2s, and 1s on the ranking. So we're moving downward. We have one new trade in oil. We got a couple of new trades here in XLE and IXC. And then you can see these have ranked down. These will eventually move out and get stopped out of a trade. We've already hit our targets. We're still up 5, 6, 7%. You would have pulled a quarter or a third at this level, a quarter or a third at this level, and let the rest trail at your stop. So again, this has been a very successful upward move, and it's given you a ton of opportunity here to see the markets in a different perspective. Lots of opportunity. As long as we're still green, we want to try to look over here for anything that's basically a 4, 5, 6, or 7 with a new trading opportunity, preferably shifting upward, generating new or existing trades that we can target and have not hit the profit targets yet. Remember, once you start hitting profit targets, you can still get into the trade. You can still run the trade the way you want, but it's really designed to give you this opportunity for target 1, target 2, and then runner. So we're kind of weak right now, but we're looking to see what happens and if we get new opportunity. If the market continues to weaken, we will get the MENT rotational modeling system to generate a weaker trigger. But right now, we've got a little bit of slim pickings, so to say. You should be, just like I'm telling my clients, stay cautious, wait for the next setup. So again, if you're looking for something different and you really want to try something that works, very simple, very easy, build your own structure, follow my research, have almost unlimited opportunity to trade, swing trade, this is it. And it's really only about $50 a month, much less than the thousands of dollars a year that other people are charging for similar types of systems. So again, I do the research, you make all the decisions, let's make some money the next couple of years. Visit ment.com, come back over here, see what I have to offer, and give it a try if you're ready. Okay, guys, that's it.